You've been sitting at your desk for 6 hours. You just closed your fourth losing trade of the day. Your heart is racing, your stomach is in knots, and you're already looking for the next entry to get it back. If that feels familiar, you aren't just having a bad day. You're addicted to the screen and you're overtrading your way to a blown account. Most traders think they need a better strategy, but the truth, they just need to learn how to stop. By the end of this video, I'm going to show you exactly how to identify the invisible triggers forcing you to overtrade and the three-element system you need to fix it forever. Let's get to work. Part 2. The introduction. The chaos of the click. There's a common misconception that more trades equal more money. We're taught in the real world that hard work is correlated to time spent. In trading, that logic is a death trap. I remember my first year. I'd have 5 monitors up, chasing every fair value gap and order block I saw on the 1-minute chart. I felt like a professional. But at the end of the month, my broker was the only one making money on commissions, and my account was down 20%. The emotional impact of this is brutal. You start in a state of analysis paralysis, but once that first loss hits, you switch to revenge trading. The market stops being a place of opportunity and starts feeling like a personal enemy. This chaos arises because you don't have a system, you have a gambling habit disguised this technical analysis. Part 3. Element 1. The river flow. Price trend. The first sign you're overtrading is that you're fighting the trend. You're trying to pick a top in a massive rally or a bottom in a crash. Think of the market like a river. If the water is rushing downstream, that's your trend. Trying to swim against it is exhausting and eventually fatal. You might see a supply zone or resistance level and think it has to turn here. But without context, those lines are just lines on a screen. Indicators like the RSI will tell you the market is overbought, but a trending market can stay overbought a lot longer than you can stay solvent. If you aren't identifying the daily or 4-hour market structure first, you're just throwing darts in a hurricane. To fix overtrading, you must commit to only trading in the direction of the river. If the structure is making higher highs and higher lows, stop looking for the sell button. Period. Part 4. The execution blueprint. The second sign of overtrading is fuzzy execution. This is when you enter a trade because it looks like it might go up, but you haven't defined your exit. A professional trade is a tripod. Entry, stop loss, and take profit. If one leg is missing, the whole thing collapses. I used to jump into trades because I saw a strong green candle. 5 minutes later, the market would retrace to a 0.618 Fibonacci level, hit my mental stop loss because I didn't set a real one, and then go exactly where I thought it would. Psychologically, when you don't have a hard stop loss, every tick against you feels like a personal insult. You hold on, hoping it turns around. That's not trading, that's praying. To fix this, your rules must be binary. Did the price hit the order block? Did it touch the 0.5 equilibrium? If no, you don't click. If yes, you set the parameters and walk away. Part 5. The math of the edge. Sign number 3, you're obsessed with your win rate. Overtraders feel they need to win every trade to be right, but trading isn't about being right, it's about probability. You need to understand your edge. An edge is simply a statistical higher probability of one thing happening over another. Think of a casino. They don't get upset when one player hits a jackpot. Why? Because they know over 10,000 spins of the roulette wheel, the math guarantees they win. Through back testing and forward testing, you might find your system only wins 40% of the time. That sounds scary, right? But if your winners are 3 times larger than your losses, you are a wealthy trader. When you realize that the outcome of any single trade is random and irrelevant, the urge to overtrade vanishes. You stop trying to force a win because you know the next 20 trades will take care of the math. Part 6. Discipline and the mirror. Sign 4. You're changing your strategy every time you lose. This is the cycle of doom. You use demand zones on Monday, lose, and switch to indicator crosses on Tuesday. The hardest part of trading isn't the charts, it's the person in the mirror. Discipline is the ability to perform a boring task perfectly over and over again. Most traders fail because they can't handle the boredom. They want the dopamine hit of the click. To fix this, you need a pre-flight checklist. Is the higher time frame trend clear? Has the price reached my zone of interest like a fair value gap? Is my risk to reward at least 1 to 2? If you can't check those boxes, your hands stay off the mouse. Consistency in your process leads to consistency in your profits. Part 7. Trading as a journey of maturity. The fifth and final sign you're overtrading is emotional reactivity. If a loss ruins your evening or a win makes you feel like a god, you are still an amateur. Trading is a journey of emotional maturity. It's about the radical acceptance of loss. A loss is simply the cost of doing business. It's like a restaurant owner paying for electricity. It's not a failure, it's an expense. As you mature, you'll realize that the market doesn't owe you anything. It isn't a money printer you can turn on whenever you're bored. It's a complex system that requires patience. Some days, the best trade you can make is staying in cash. The goal isn't to be the most active trader, it's to be the most disciplined one. You are a sniper, not a machine gunner. You wait hours, sometimes days, for that one perfect setup where the trend, the level, and the signal align. Look, the losses you've taken from overtrading are just tuition fees for the university of the markets. Don't let them be in vain. Go back to your charts today. Don't look for a trade, look for your system. Evaluate your last 10 trades. How many of them actually followed your rules? If the answer is 0, start fresh tomorrow. Practice the discipline of doing nothing. Wait for the market to come to you, because the moment you stop chasing the market is the moment the market starts paying you. Stay disciplined, stay patient, and I'll see you in the next one.